Welcome back, everyone. I am Blair Armstrong with Team Armstrong, Coldwell Banker, Global Luxury Specialist out here in the Coachella Valley and brand ambassador for the Global Luxury line of Coldwell Banker Real Estate. Anyway, welcome back. It's been a little bit since we just talked just real estate, so today we're going to be joined here in just a few moments with a good friend and colleague of mine, Sean LaRue of Sean LaRue Loans. We're going to discuss some different things that we think that not only you need to hear, get you the right information out there, because there's so much misinformation of kind of what's going on with interest rates in the housing world, all these different things. So strap in a little bit, really enjoy this moment, take some information, grab a pen, grab a piece of paper. Most of all, once you get this information, if you feel this is a good information for someone like you or maybe one of your friends or family members, feel free to share this show. It's going to be on Spotify. It's also going to be on YouTube. And then we'll attach this to Sean's YouTube as well. If you have any questions, feel free to reach out through us, which I'll probably most likely state at the end of the show anyway. But feel free to reach out to us either by DM. You can contact us through text, email, whatever it may be. Anyway, that is it for right now. Again, this is going to really help us get prepared to get in touch with what's going on in this market. So, as I said, strap in. We're about to join Sean LaRue of Sean LaRue Loans and get some real information on what's going on in our real estate world. All right. Good morning, good afternoon, good evening, wherever you may be. Typically, when you see me, we are talking about an episode of Old Guys Still Rock, and this guy on my right or your left, whatever it may be, has been a guest speaker on that today. But today, we are not doing Old Guys Still Rock. We are doing Team Armstrong and Sean Loans. We're going to get into mortgages. We're going to get into real estate today. We're not going to talk about any self-help, which this may be a little bit of self-help, but there's been so much information that has been exchanged through social media and news. And as we've mentioned before, it gets very convoluted and we don't know what is right and what is wrong, and we start spreading bad information. So with that being said, I want to welcome Sean LaRue of SeanLoans.com back on the show. It's been a while. We have actually had some conversations over the last couple of days, and this is going to be a more consistent podcast that we put out to, because we just feel that right now, this real estate world, we're both in it, even though he's in mortgages and I'm in on the residential sales side or buy side. We work together. So we're just going to start clawing away and peeling back the onion, not only information for you, but for you to share information to others. And if somebody that you know, like, or trust, or whatever it may be, is looking for this information, feel free to share this. As you know, what we do with Old Guys Still Rock, but especially in any of our podcasts here, we are not sponsored by anybody. So the only way for us to get our message out is if you share the show. So I jokingly say, don't be a hoe, share the show.
Share the show.
All right. Anyway, with that being said, man, welcome back, brother. How are you? It has been a minute. I did get blessed to see you, I think about a week ago. You swung by.
Yep.
Is that about right?
So you surprised you. I figured you'd be on task. I was just going to drop a little something through your door, but you were there. It's always good to see your face, brother. I love your energy and your consistency, and I just love talking about real estate. So it's just super easy.
That's good, man. And I'm glad that you're here. We've been, you and I've been together for almost 4 years now. Wow. Not together as in a collaboration, just to make that clear. So you were introduced to me by Justin Barry of Caritas Real Estate out here in the desert about 4 years ago, and we've just always been working together for there. So a little bit different world. Sometimes we get to work together, but mostly, we become good friends, and you've just been a great resource for Team Armstrong Coldwell Banker out here in the desert. So I thank you for that, and thank you for the nice words that you just said to there. So let's get into it, man. It has been a freaking crazy, crazy world in the world of real estate, with, judgments and supposedly things coming down the pipeline, and they get pushed back. not only has it affected the real estate market, and we're still trying to figure that out. We're just, trial by error, but it's also affected you, and it's affected some of the consumers as well, because now they don't know what to do, right? It almost kind of what happened to us on the NAR side and this MLS stuff and signing forms and all that stuff. I felt like it kind of scared the buyer a little bit, and I feel like they've retracted a little bit. I don't know if you've seen that or not.
Yeah, no, exactly. I think something that's happening in the market right now is consumer confidence is just in the gutter. They think there's all this pending litigation and different things that are going to change the market, and for some reason, they're putting a lot of clout in that uncertainty. And it's like, hey, if you need a home, buy a home. If you need to move, don't put your life on hold. It's very interesting that
Mm-hmm.
that's happening. And I think when we're within the 90-day mark of some of these things going in, and because we just don't have a lot of very certain information on how it's going to go, um, it's interesting. It felt, I don't know about you, but it felt like it kind of fell off a cliff there at the end of March.
Yeah.
It seems it seems to be getting a lot better now, and we're
Mm-hmm.
picking up some momentum. The banks are busier. Um, we're getting a lot more application requests. Um, there's also a lot fewer loan officers out there. I mean, 40% of them out there decided not to renew their licenses, which I'm totally great with. More
Yeah.
pieces of the pie
Right.
for us true professionals. And I think we're going to continue to see a lot of that, not only on the loan officer side,
Mm-hmm.
but also the real estate agent
Mm-hmm.
side.
Mm-hmm.
Um, People who are not resilient, don't have their mindset right, you know, the negative Nancy's, they're just feeding and fueling, all the negative reasons of why they can't do business instead of just
Mm-hmm.
focusing on making contacts and doing what they can do to control their business. And so, I mean, I think it's a great time in the industry
Mm-hmm.
for the true professionals and the cream of the crop to kind of rise,
Mm-hmm.
and let the best man win or
Yeah.
woman win.
I think you're spot on about that too. There was a lot of stuff obviously a couple of years ago during COVID. People buying houses and second homes or whatever it may be, and it was this frenzy, right? And a lot of people put their hat in the market, and it just kind of fell in their lap. Now you have to be again. This market has always been this way. So even if we had somebody that's been in real estate for 40 years, they could say this market's always changing. Well, any business is always changing. So that's one thing that now that you and I get to sit down and talk about this, which we'll get back into a little bit about rates and everything. But I think that's a big thing to mention too, is that this market is always changing. It's always fluid. And then you have to, I can attest for our team, and obviously can attest for you because we've been working together for the last couple of years. Is that we're basically agents of change, right? I mean, we stay up with the changes on there. We get thrown something else at this inconvenience or this hurdle, but we're always learning how to adjust. And the reason why, and Sean can speak on this too, is the reason why that we're doing this is because we also know that your lives are changing. It's not just our business model that's changing; it's your lives are changing, different needs, different wants, different financial situations, and so we're always not adhering, but adjusting to those changes on there. And that's why what you just said there, for us that are going to survive this change in the market, there's a reason for that. And we just ask that you reach out to us if you have any questions regarding real estate, or if you have any questions regarding the mortgage world. You have two great resources, time tested, sitting right in front of you out there. So don't hesitate. Just reach out and say, hey, I got this question. What do you think about this? Hey, I heard this. Is this true or not true? And we're going to be super
Yeah.
transparent with you. Sometimes we'll be a little colorful in our conversation too. You just never know.
Yeah,
Right.
Blair, I think you're absolutely right. I think we are agents of change, and I don't know about you, but there's just so much information about change. Um, on the internet. There's
Mm-hmm.
there's just so much content, and you can really find whatever perspective you want when you're searching on the internet. And what I recommend is, work with a true professional who's navigating all these changes, because what you read may not apply to you, or it may apply to you in a completely different way than you thought. And the only way to get through a real estate deal is to, customize it with a professional, because there are
Mm-hmm.
just so many little twists and turns
Mm-hmm.
in real estate. Like, we know we can set out the expectations for the normal process, but there's always something that might be a little bit of a surprise one way or another. So,
Absolutely.
um,
So, what are you seeing right now in the market? I mean, I know you guys got a kind of a left hook on this with this NAR adjustment that we've had into it, and it's affected you. So, what are you seeing? What is the biggest misconception right now in the mortgage world when a buyer's looking to buy something? What are some things that you're really encouraging your clients to do right now?
like, regarding the NAR stuff, or just in
Well,
general?
just in general of okay, hey, I'm looking to buy a house. Is this a good time or a bad time? What are some of the steps that I need to do to circumvent uh, this new world of? We're still in this um, mindset that these 7% rates are extremely high. It's not a good time for me to buy those type of things. So, what type of things are you helping clients navigate to get through during this scarcity tactic, what I'll call you, that of these high interest rates?
Yeah.
Oh my gosh, I lost you.
So it's definitely interesting. You kind of froze there for a second. I don't know if you can hear me. Um, but it's interesting because interest rates had dipped down into the high sixes, mid sixes, and then they went back up last month to about 7.5, and now they're trickling back down to about 7.1, 7.25. There's all different kinds of ways to structure your financing, but one of the things that we like to do is ask you about your dreams and goals. And that's part of our pre-application and our pre-approval process, where we're really getting to know you, your personalities, and your family's dreams and goals. And there's a lot of different ways to structure financing to the best of the ability of our ability, but it's also one of those things where you really have to have the buy-in, um, depending on what you're willing to stomach. So, for example, we could do a 2-1 buy down or a 3-2-1 buy down, but does that meet your personal, either liberal or conservative perspective of what's going to happen in the market? Can you stomach the market and rates, or are you pretty happy getting the lowest rate locked in on a permanent buy down, so that you know that you have that ability? You either have the ability to refinance, or you're really happy with that payment potentially long term. So, um,
I
we
need to
really
I
get
need
to,
to stop you here real quick. I know you've been talking for a little bit, but I lost internet connection, so we need to regroup 5 minutes, and I'll piece this together.
cool.
Can you go ahead and
I,
go start from that back side? So again, going back to what are some of the things that you're seeing in the marketplace of going to is a good time to buy? Again, we're dealing with this information of interest rates are high. I don't know if it's a good time. As I said, to a little bit of misconception of 7%. I can't afford a house. I can't do some different things. Even though that in the past, we've been 17, we talked about this in the past, 17, 19% in the past, and now we're used to this 2.5, 3.25%. So what are you doing to help your clients hurdle this misconception that 7% is a high interest rate?
I I like to have the conversation with my clients to ask them, what their personality is and what their tolerance is potentially for stomaching the market. and really understand where they're coming from. You know, I have a international political economy background, and so that really goes into play with a lot of what's happening with rates and the geopolitical stuff. We There's a lot of talk right now that prices have been coming down from their highs in 2020 and 2021.
Mm-hmm.
And because interest rates are higher right now, some of those prices are coming back down. But economics are going to tell us when interest rates go into the fives, maybe you have a 7% payment today,
Mm-hmm.
but what is that price of the property you want to buy today going to be, or what's a comparable property going to cost you in 1 year or 2 years if rates go into the fives? We've been talking about this, you know, marry the house and date the rate thing for 2 years. And I had a real estate agent use that on me recently, and I was like, oh my gosh, does that sound as cheesy as
It
I
is
just
cheesy.
It's cheesy. It's cheesy. Marry the house, date the rate. But what we've been talking about is get that price locked in. This might be a temporary higher payment, okay?
Mm-hmm.
But what could that potential payment be once rates go down?
Mm-hmm.
And how does that payment change with that lower rate if the prices go way up?
Mm-hmm.
You know, if you're buying a $600,000 house at 7% today, are you going to end up having to pay 685 if it goes to 5.8?
Mm-hmm.
Like it all balances out. It's all a seesaw. And that's why we've been recommending don't put your life on hold. Find the house that's going to work for you and your family. You know, lock in the price, because if you're not putting down 20%, are you going to gain the equity that we just discussed? Are you going to get that $85,000 in equity, or are you going to be paying another seller
Mm-hmm.
that equity for that lower rate?
Mm-hmm.
And so it's really about finding, you know, the balance with timing, your lifestyle, and what your plans are, because I know a lot of people who have just been putting their lives on hold, and they're
Mm-hmm.
just like super depressed waiting for the day to do it instead of pulling the trigger. And
Mm-hmm.
when we're doing the math, we're really looking at a very negligible amount of payment difference for what seems like, you know, the sky is falling
Mm-hmm.
kind of, you know, mentality with where the market's at right now. So I know it's kind of like beating a dead horse with the marry the house and date the rate, but I don't think people have actually heard it.
Mm-hmm.
Um, I think it's hard to stomach or know really what's going to happen. I don't think rates are going to go back into the threes. I don't even know if they're going to go back into the fours. But a lot of the experts are talking about, you know, 5.5, 5.75 is really where the market's going to start taking off
Mm-hmm.
again.
Mm-hmm.
And we saw FHA rates at about 6.25 for a little bit. Um, and I think that was like in February to late March, and we seem to have some momentum that was gaining through there. So it's really about just getting to know the client, what's important to them, where they're at. You know, what are some of the benefits? Moving are you moving states to get a better job? Does that increase in income kind of offset, you know, what you think that payment's going to be?
Mm-hmm.
Um, but also, we have a lot of move up buyers and contingent buyers who are holding on to these 3% first mortgage
Mm-hmm.
rates, but they've got these home equity lines, and a lot of people have these home equity lines of credit that are on rates between 9 and 11%. And hopefully those rates will come down when the Fed starts reducing the prime interest rate and the Fed funds rate. But, you know, depending on those loan amounts, your blended rate, you know, might be way higher than you actually think, just because you're holding on to what you think is a good deal.
Yeah, and I think to kind of to peel that back a little bit more, going back to what Sean first started talking about, is that yes, the rates are a little bit higher. Most likely these rates will fall. That's what's going to generate funds, bonds, all this different things. So there's a bigger picture behind this. But the point I think Sean was trying to make is if you marry the house, date the rate. When these interest rates drop, we're nationwide at a shortage of homes. So when these interest rates drop, houses prices go up. And so what he's saying is lock in now, pay that house price where it's in a kind of a stagnant market. I'm not saying there's not activity out there, but it's not very active right now with the amount of stuff that's on the market and purchasing and so on and so forth. But as soon as those interest rates even drop like a half point, then there's just like this mass surge of people that come in and want to buy a house, and all of a sudden house prices that were here for a long time all of a sudden jump up here like this. And so all that money that you thought you were going to save on that interest rate, it's mute. Or you already have your house, and yes, you're paying a higher interest rate. You go back and talk to Sean and say, "Hey, can I get that 5.5?" And you just save yourself a ton of money. Plus, you gain a ton of equity in your home, like that. I mean, it's two different things.
I kind of want to do a little tangent on this because there's something I was just thinking about that a lot of people aren't even talking about, and like 50% of the market doesn't even get loans. Okay.
Yeah.
So a lot, like half of the market isn't rate sensitive. And there's a lot of investors out there that are paying cash. There's a lot of second home buyers paying cash. And so we're talking about low supply. I think that's going to continue. And even when rates get good, not only are you going to be competing against other new interested buyers who have been on the sidelines for the last 2 years and putting their house on hold, but now you're also competing against a quick close cash offer with no contingencies still. And so, like, if you want to get in the game, you got to compete. You know,
Yeah.
if you want to buy a house, you got to try to buy a house. I have one client I just found out this morning. I'm like, every house, this is the one. We're going to get this one. She's made 8 offers and she just got beat out again by an all cash offer. And she's putting down like 40%.
Yeah.
It's not even like an issue for financing. It's just even getting your foot in the door. And so, we have a very low supply of inventory right now, and that's still lower than our current demand. But what happens when there are so many more buyers that are back in the game? And what we're seeing right now on the loan side is that we're talking to a lot of people who have never been financeable. There's, a lot of the people that qualify really well are on the sideline, and it's like, hey, we got a good loan. This is easy. We can get you approved. And they're like, cool. Well, I'm going to wait for a deal. And I want to wait for the right house. And they're making smart, educated decisions because they qualify well. Well, the people who are all interested right now and we're wondering why it's so difficult to get these financing offers closed is because we're working with buyers who have never bought before or who have had, underwriting challenges or unique situations where they don't fit in the box. And, because there's a very small percentage of people who have to make the decision, qualify really well, and are executing it. And so it's just a really funky market right now.
Yeah. I think that's a big thing. I just go back to, and there was obviously, free money back in 2006, 5, whatever it was back there. Was everyone was qualifying. It didn't matter what you had a job or not. And obviously there was that big crash. They put a lot of restrictions on there. So what Sean just said is if you have never been through the process, I'd really start that process right now. I actually just talked to somebody the other day. They were asking me questions like, listen, before we even get to the spot, not only would I get pre-approved, I would get pre-underwritten because it just helps that process. You know everything of what you can and can't do. And then if I'm a realtor and I'm going against a cash buyer or even a pre-underwritten buyer, now I'm kind of apples and apples. I know there's a big difference in the two. There's still some loopholes that you have to cross through, but being even not just pre-approved, like, okay, you've got the finance, you have the death stuff, but then in underwriting, they're going to go ahead and avail of some other things that maybe need addressed. So now if we get pre-underwritten, those hurdles are kind of out of the way. Not only helps out Sean, but it helps you as a buyer become in as stronger on an offer, even if you are competing. So that's what we look for as a realtor. We're looking for, okay, is it a cash buyer? Is it being financed? Okay, they got a pre-approval. Okay, well, I'm pre-underwritten. And there's another thing. It's maybe that you have what Sean has on here. He says, putting 40% down. Maybe now that puts you at a price point that I don't have to have an appraisal or again, now everything's different. I'm just putting different scenarios. It may not need to be an appraisal or, kind of take that stuff out of the way. So if you're going to start or you've been putting stuff off to the side of the market, I would definitely have a conversation. If you have a loan officer, great, use them. If you don't, Sean, how many states are you in now?
We're in 49 states.
Okay. Just missed a couple. All right. I mean, come on.
Look, it's a great opportunity. There's 3 different buckets with the pre-approvals. I highly recommend getting a same as cash pre-approval, 15-day close. We're able to front load the process while you're waiting for that perfect property. But, it is a team effort. I need your help to provide me with all the stuff that we need, but we're able to get funding commitments. Credit, income, and assets are the 3 things that we look at, and we can eliminate as many of those variables as possible up front by doing the work. And then once we're under contract, all we have to do is get an appraisal, an inspection, maybe a termite report, and the prelim, and we can rock and roll.
Mm-hmm. So just is getting that out of the way. And I think that's a big thing for everyone that's watching today. And then if you share this out there, again, share this as much as possible, because I think this information is needed, is stop waiting. And I don't know how else to put it. This is not salesy, but if you are thinking about buying a home, start the process now. I'm telling you, once these rates drop, we're going to go back to high prices again. If you think prices are high now, low demand, low inventory and high demand is just going to drive them higher. You're not saving yourself any money, or you're not going to find a perfect house. And starting off smaller than you wanted to is not a bad idea. If you have to go ahead to get to 2 or 3 or 4 houses and build equity in each one along the way to get to that coup de grace that you want, then do it. You don't need to be Instagram famous house overnight. And do a lot. What a lot of us did is start super small, and you kind of work your way up to where you feel like this is the house for me. So I just think there's a lot of stuff here, man. And I don't want to make this too long because we're going to be on here next week. But I think that you gave us a lot of great information. For those people that see this, and we'll get it through, this will be connected to Sean's social media pages. Obviously, everybody throughout here through Team Armstrong as well. But share this show. And if you have questions regarding what we talked about, feel free to reach out. Either send us a DM, put it in comments. This is going to be on our YouTube channel, so Team Armstrong YouTube. And again, the link will be on there. Just leave your comments in there or thoughts of what you want to, and we'll answer those next week. But any final thoughts for you, my friend?
It's all between the ears, brother. You got to have that mindset, positive attitude, and it's a good life. It's a good life.
Yeah. All right, guys. Again, thank you so much for tuning in. We'll be again here next week to talk about a different subject right now. But I think I want to reiterate this. If you're thinking about purchasing a house, do not wait for that kind of special moment or prices to drop or whatever. Buy now, as Sean says, marry the house, date the rate. We can always adjust the rate, but you're not going to be able to adjust a price of a house. So Thank you guys so much for tuning in with us today. We greatly appreciate it. We'll be back again next week. Again, if you have any questions, feel free to go ahead and send those out to us. Again, Sean, SeanLoans.com. Yeah?
Yep, SeanLoans.com.
Okay. Instagram pages?
Instagram and YouTube's Sean LaRue Home Loans.
Okay.
Is my handle.
Okay. All right, guys. We'll see you next week. Thank you so much for your support. Love you guys. Take care.